Most businesses do not fail because of bad ideas. They fail because the owner does not understand the numbers that reveal what is actually happening inside the company. Some business owners are running their company without proper financial visibility, not because they are not smart, not because they don't work hard, but because the owner never learned how to interpret the financial signals of the company. In this video, I'll walk you through the 5 financial numbers that every business owner should understand if they want to stay in control of their company and avoid unpleasant surprises. Stay until the end because the number 4 is the one that catches out even the experienced and most successful business owners. Welcome to Finance Foundation for Business Owners, the series that cut through the jargons and give you the financial clarity to run your business with real confidence. I am Bookie from Triple P Solutions. Here's the truth most people don't tell you when you start a business. It's just about your ideas, your passion, or hard work. Business is a financial game. You can be the most passionate entrepreneur in the room. You can have the best product, the most loyal customers, the hardest working team, and still fail because the finances weren't managed. And the good news is, you don't have to be an accountant to run your business well. You do not need to memorize balance sheets or understand tax legislation. You just need to understand 5 core numbers, what they mean and what they are telling you about the health of a business. And the 5 numbers form the financial foundation of every strong, sustainable businesses. Let's get into them, starting with number 1, revenue. I call it your business heartbeat. Revenue is the total income your business generates from selling your product or services before any costs are deducted. It goes by different names. Some people call it turnover, sales, top line. They all mean the same thing. So for example, if you invoice a client for £50,000 this month, whether they've paid you or not, that £50,000 is your revenue. Revenue tells you the business is alive and trading. But here's what most owners get wrong. They celebrate revenue as if it's success. Revenue isn't success. There are businesses having over £1 million in revenue and yet we're droning. Meanwhile, there are smaller businesses turning just over £200,000 and they were genuinely thriving. The difference was never the revenue figure. It was everything that happened to that money afterwards. So when someone asks you, how is business? And you say turnover is up, that's a heartbeat. It means the business is alive, but it does not tell you whether the business is healthy. Revenue tells you the size of your business, it does not tell you the health of it. So if revenue isn't enough on its own, what should you be looking at next? That's where the gross profit comes in. That's number 2, gross profit. The first test of viability. Gross profit is what remains after you subtract the direct cost of delivering your product or service. These direct costs are called your cost of goods sold. They include your material cost, direct labor, production cost, delivery cost, anything that is directly tied to creating what you sell. Simple example is your business generates £100,000 in revenue this month. The direct cost to deliver that work is about £60,000. Then your gross profit is £40,000. Your gross profit margin, that's the percentage, is 40%. This number tells you something critical, how profitable your core offering actually is. A 40% gross margin means for every £1 of revenue, you keep 40 pence before overheads. A 20% gross margin means you only keep 20 pence. Every cost, every risk, every overhead must be covered from this 20 pence. A low gross margin means you are working hard but you are keeping little. It's one of the first things we look at when a business owner says, I'm busy but not making money. Either the pricing is too low, the delivery costs are too high, or the business is discounting too heavily. Any of this will crush your gross profits, and no amount of revenue growth will fix it. You cannot go your way out of a broken gross margin. But gross profit isn't the money you take home yet, because there's a whole other layer of cost still to come, and that's number 3, net profit, the real bottom line. Net profit is what is left after every single expense has been paid, not just your delivery cost, everything. Your salaries, your rent, your software subscription, marketing expenses, professional fees, insurance, utilities, depreciation, and don't forget your tax. When every single cost has been settled, whatever remains is your net profit. So let's continue with our example. Your revenue is £100,000. Your gross profit is £40,000. Now subtract your overheads. Let's say your salaries, rent, and every other running cost is £25,000. Then your net profit is £15,000. That's a 15% net margin. Now, 15% is actually a reasonable net margin for many small and middle enterprises. But here's what I want you to notice. You started with 100,000 as revenue and you are keeping just 15,000 pounds at the end of the day. That's what the business really earned, not 100,000 pounds. It's 15,000 pounds. This is why net profit is called the bottom line. It is a number that tells you whether the business is truly working. It is possible to have a good gross profits but terrible net profits. If your overhead are out of control, and this is where overhead becomes very dangerous. Some business owners grow their revenue year on and year in and feel very successful, but their overhead grow even faster. More staff, bigger offices, higher subscription, revenue goes up and net profit goes down or even disappear entirely. So always ask yourself, not just are we growing, but are we growing profitably? Watch both margins. Don't just manage revenue and ignore the cost structure. Number 1, 2, and 3 are all about profitability. And profitability matters in business. But here is where many business owners, including profitable ones, fall into a very dangerous trap. You can be profitable on paper and still run out of cash. This is a crisis nobody sees coming until it is too late. And that's number 4, cash flow. I call it the lifeblood of your business. Cash flow is the movement of money into and out of your business. And critically, the timing of that movement. This is a number that trips up even experienced business owners. Here is a real scenario. You win a contract worth 80,000 pounds. Brilliant. You deliver the work, you raise the invoice, you celebrate. But your client pays you in 60 days. So the cash won't arrive until 2 months. Meanwhile, you need to pay your staff this Friday. Your supplier invoice is due next week. Your rent is due at the end of the month. Your profit and loss account says you are profitable. Your bank account says overdrawn. That gap between when you earn the money and when it's actually lands into your account is the cash flow problem. And it is one of the most common reasons profitable businesses fail. So cash flow is what keeps the lights on. It's what keeps the salaries paid, the suppliers outside, the business operating. Profit tell you whether the business model is working. Cash flow tell you whether the business survives. Profit is the score at the end of the match, while cash flow is what keeps you on the pitch. So revenue, gross profit, net profit, and cash flow we've covered 4. Now number 5 is different from the others. It is not a result, it's a target. And knowing it changes how you run your business. The break-even point, your survival number. The break-even point is the level of revenue your business must reach just to cover all its costs. At break-even, you are making 0 profit and you are making 0 loss. You are surviving. No profit, no loss, simply survival. A simple example is this. Your total monthly costs, salaries, rent, utility, subscription, repayment, everything add up to say 30,000 pounds. That means your business must generate at least 30,000 pounds every single month just to break even. Every pound of revenue above 30,000 pounds contributes to profits. And every pound below 30,000 pounds means you are losing money that month. Now, here's why knowing your break-even point is so powerful. It removes ambiguity. When you know your break-even, you can look at your sales pipeline for the month and instantly know, are we safe? Are we behind? Do we need to push harder? It gives you a crystal clear monthly target to communicate to your team. It helps you make smarter decisions about hiring, about investments, about expansion. Because you know exactly what revenue level you need to cover to have new costs. And when times are tough, and every business goes through tough periods, knowing your break-even tells you how long you can sustain a slow month before you need to take action. Business owners who don't know their break-even are always anxious because they never know if they've done enough. Business owners who know their break-even are always informed because they know exactly where they stand. It is one of the simplest, most empowering numbers in business. Now, here's what I really want you to take away from this video. These 5 numbers don't exist in isolation. They are 5 chapters of the same financial story. And you need all 5 to understand what's really happening in your business. Revenue tell you how much your business are doing. Gross profit tell you whether what you do is priced and delivered efficiently. Net profit tells you whether the whole operation, every cost, every overhead is sustainable. Cash flow tell you whether you can survive the next 30, 60, and 90 days. And break even tells you the flaw. The non-negotiable monthly targets your business must hit to stay alive. If you're only watching one of these numbers, you are only reading one page of the book. And you always be making decisions with incomplete information. You need all five to understand the full picture. When you start tracking all five numbers together, something shifts. You stop reacting to your business, you start leading it. And that shift from reactive owner to informed leader is exactly what Triple P Solution exists to help you make. At Triple P Solutions, we help business owners, leaders, and organizations build financial clarity and the system to sustain it. If this video was very useful, please subscribe and share it with one business owner who needs it today. I'll see you in the next episode.